The euro, pound, and other risky assets continue to rise against the US dollar. Confusion among the US Federal Reserve, with significantly differing statements from policymakers, has put pressure on the dollar. Growing uncertainty about the monetary policy trajectory, combined with contradictory statements from members of the Open Market Committee, undermines traders' confidence in the stability of the US currency. On one hand, there are increasing calls for further tight monetary policy to finally curb inflation, which, although slowing, remains above the target level of 2%. On the other hand, the camp advocating rate cuts is gaining strength, pointing to negative consequences for economic growth and the labour market. Today, in the first half of the day, the euro may continue to rise, but strong data on Eurozone GDP growth, employment levels, and the external trade balance are needed to support this. Optimistic GDP figures demonstrating resilient growth in the Eurozone economy will catalyse further strengthening of the euro. Positive changes in employment levels will also play a role. A decrease in unemployment and an increase in the number of employed will create a favourable environment for rising consumer spending and business activity, which, in turn, will support the euro. A positive external trade balance reflecting higher exports and imports will be another factor contributing to the euro's growth. As for the pound, there are no reports today for the UK, so all attention will be on Rachel Reeves's further plans for shaping the country's budget for the next financial year. Her statements about refusing to raise taxes yesterday surprised many, further confusing traders. The situation is complicated by the fact that the Conservative government is under increasing pressure from the opposition and the public. Economic difficulties, inflation, and the rising cost of living undermine trust in the ruling party. Reeves, while presenting the budget, will need to strike a balance between stimulating economic growth and reducing public debt. If the data aligns with economists' expectations, it is better to act based on the mean reversion strategy. If the data is significantly above or below economists' expectations, it is best to use the momentum strategy. Momentum strategy breakout for the US pair buying on a breakout above 1.1655 may lead to an increase in the euro to around 1.1678 and 1.1703. A sell on a breakout below 1.1631 may lead to a decline in the euro to around 1.1607 and 1.1582. For the GB plus pair buying on a breakout above 1.3172 may lead to an increase in the pound to around 1.3211 and 1.3244. Sell on a breakout below 1.3130 may lead to a decline in the pound to around 1.3086 and 1.3052. For the USD pair buying on a breakout above 154.68 may lead to an increase in the dollar to around 155.15 and 155.54. A sell on a breakout below 154.40 may lead to a decline in the dollar to around 154.00 and 153.77. Mean reversion strategy retracement. For the US pair, I will look for sells after a failed breakout above 1.1652. On a return below this level, I will look for buys after a failed breakout below 1.1623. Or on a return to this level for the GB plus pair, I will look for sells after a failed breakout above 1.3162. On a return below this level, I will look for buys after a failed breakout below 1.3125. On a return to this level for the orders pair, I will look for sells after a failed breakout above 0.6561. On a return below this level, I will look for buys after a failed breakout below 0.6524. On a return to this level for the ASCA pair, I will look for sells after a failed breakout above 1.4044. On a return below this level, I will look for buys after a failed breakout below 1.4007. On a return to this level, the material has been provided by robotfx.org.